Hi, good day to all. This is Calvin here. Welcome to this week's latest edition of Weekly Technical Outlook on the major stock indices for the week of 8 March to 12th of March. So, as we know, last week it has already been a kind of a volatile week for the global stock indices, where the US market, very interestingly, had four consecutive of straight days of decline since the start of last Monday. But very interestingly, last Friday, towards the close, I would say about 2 to 3 hours before the New York market closed, the US market did a rather positive bullish reversal that led to almost all the 11 sectors, the S&P sectors, especially the information technology, to close in the green. So, what do we have in store for this week on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 30 index that I will share with you all next. So, before we start, let's take a look at the disclaimer slides first. All right, so let's have a quick recap on last week performance, and I also added its prior week performance in blue, which is the last week of February, to do a comparison. So as you could see that late last Friday's performance on the US market has contributed a significant positive feedback loop that enabled the S&P 500 to actually close in the green for last week, plus 0.8% versus a loss of the prior week, which is at negative 2.6. Similar for the Nasdaq 100, which is the worst underperformer due to its heavily concentrated weightage on growth stocks, especially on the mega big techs like the FANGs. That includes as well Tesla, that has been taking the brunt of this sell-off in terms of a higher sensitivity in this ongoing rising treasury yield curve, treasury yield, especially on those longer dated US Treasury yield, 10 years and above. So, but very interestingly, its weekly loss for last week has managed to trim down to negative 1.9% versus the prior week at negative 4.9%. Very positive for the Dow Jones Industrial Average, which is up 1.8% versus the prior week, which is negative 1.8%, added by what I call that it's heavily weighted towards the cyclicals as well as the uh, value oriented stocks that is less concentrated on growth stocks like like those stocks in the Nasdaq 100. Not too bad for the Russell 2000 index that comprises of US small caps, negative 0.4% versus the prior week of negative 2.9%. Hang Seng almost unchanged, plus 0.4% last week. Then you have even the Hang Seng Tech Index, which also recently suffered its brunt due to this negative feedback loop that is spilled over on the global technology team play, which is trim its losses for the prior week, negative 3.6% versus negative 15%. Nikkei 225 almost unchanged. And one of the outstanding performer will be the German DAX, which is up 1% last week versus its prior week of negative 1.5%. All right, so now let's switch to the CMC markets platform. So before I start, one of the international growth proxy that I like to share or that I will always monitor will be the semiconductor index, or I will look at the SOX in short, which is the ETF that comprises of almost all the international key semiconductor stocks that are actually this is being packaged as SOX and is listed in the New York Stock Exchange. So what we could see very interestingly is yes, last week actually it did a plunge below the 50-day moving average. But however, where does it stop? It actually stopped exactly at this major trend line support level that is in place since 18th of March 2020 low, which is also in line with this post-pandemic recovery that is actually seen in almost all risk assets worldwide. So what we could see over here is that it actually did a strong recovery towards the end of last week, which those who actually look at Japanese candlesticks actually form a bullish hammer formation, which is a kind of a bullish reversal candlestick, indicating to us that the previous down move in the last three sessions, starting from Tuesday, seems to be all exhausted. And also no change on the RSI. The RSI managed to actually held at this significant support, which is close to the 44 level mark. And what's interesting over here is that the push down and the formation of this bullish reversal hammer formed exactly at the 23.6% retracement of this entire ongoing major impulsive bullish up move that is still intact since 18th of March 2020 low. Okay, let me draw for you all. Okay, so here we go. Okay, so all in all, right, what we are seeing right now over here is not too scary yet on this SOX ETF. That means, i.e., it doesn't have a clear sign that we are seeing this. I would say the start of a kind of a medium term or a major change in this ongoing bullish uptrend that is still intact since 18 March 2020 low. So, but nevertheless, right, perhaps it could do a bit of sideways for this week. So what I have over here is that there's this overhanging intermediate resistance at 413.60, which was last week kind of a key medium-term support that was taken out, now turns into a pullback resistance, which also confluence pretty closely with the 50-day moving average right now, also acting as a resistance. So all in all, we could see over here that perhaps we could see a bit of sideways between 413.60 holding above this 38.2.30. Okay, but nevertheless, for the boost to actually gain more initial to actually start a kind of a potential impulsive uplifts, it got to have a daily close above 413.60 to take up to a next higher high, which is another new high, a new all-time high at this zone of 458 slash 465.50 level on the stocks. So what we could see over here is that, but take a look at the stocks over here is that, I'll be quite hesitant to say that, hey, the major uptrend currently, which is in place since 18 March 2020, has already been damaged, or the trend has already been reduced, has kind of changed towards the downside. Okay, so with that, let's take a look at the S&P 500, the SPX 500. So we start from the daily chart. So very interestingly, right, it actually challenged the 50-day moving average. On Friday, it managed to close back above it, and take a look at where it actually staged the rebound. It actually managed to stage a rebound very similar to what we see initially, which is the early start of this year, where we have this kind of a minor scare as well of this decline. So if you look at the magnitude of this decline over here, okay, let me draw the percentage for. Okay, it's about 5.31%. So definitely this ongoing fall from this current all-time high of 16 Feb to last Friday low is coming at 5.9%. So give or take is about roughly the same magnitude of decline. So nothing pretty scary over here in terms of the magnitude of fall, the current one versus the previous one that we see earlier at the start of this year. And most importantly, where this fall actually stopped or stalled in the previous decline was exactly at this pullback support of this former major expanding wedge that was taken out. Okay, previously this expanding wedge has been in place since September 2018, and it was taken out very clearly on the last year, which is the early part of December 2020, tested again on the previous scare, which is the early part of this year, and right now retested again, and it started to form a pretty strong daily candlestick pattern as well. Okay, if you look at this long green candle and this long green candle, so all in all, what we could see over here is, I would say that yes, we have an earlier scare earlier on at the start of the week, but however, on Friday's price action, and especially it's actually occurs towards the end of the week, which implies to me that there are still some pockets of optimism that is coming into the market towards the close, or about coming to the close, that support this market. All right, so that's why it give me a kind of a price action behavior of not to actually validate a kind of medium term down move at this point in stage for the S&P 500. And if you look at the daily RSI, the daily RSI is also holding pretty nicely at this corresponding support level, which was actually highlighted last week, bouncing off from it at this close to this 42 level mark. So what I have for this week is that I will actually turn neutral for now first, because of there's this whipsaw at this 38 3800 level, which was my key medium-term support for last week. So I will actually turn neutral for this week. We talk about a multi-week strategy for 1 to 3 weeks between 3640, which is this overlap level, the wave of overlap, and this former range resistance turns into a pullback support on 21st of December 2020. And right now there's this intermediate resistance that is coming into place, which is 3895, which is this descending trend line that was drawn from its current all-time high at 16 Feb 2021. So I will turn neutral between those two levels first. Only we see a clear breakout of 3895, that will actually validate a kind of a more confident to validate the start of a new impulsive up move to target this 4080 slash 4100 level. All right, so now going on to the Nasdaq 100. So pretty similar on the Nasdaq 100 as well. Okay, let me open the Nasdaq 100 chart. All right, so go to the daily chart first. So if you look at the Nasdaq 100 daily chart, so where is actually stopped? It actually stopped at this yes, broke below the 50-day moving average, stopped right at the pullback support of this former kind of pullback resistance from 2nd of Sep, taken out on 3rd of December, tested again on 11th of December, then thereafter now did a first test on it last week, which is at this 12,400 level. Intraday low, we have this 12,210, and we could see a kind of a strong rebound on last Friday. Okay, RSI, nothing much, still the same, hovering at this corresponding support at the 37 level. So definitely this is one of the weaker major US stock indices due to its heavily weightage towards growth names like the FANGs as well as Tesla. So on the 4-hour chart, which is the strategy chart for a 1 to 3 week perspective, is I will actually be more kind of a neutral from a 1 to 3 week strategy, is to actually kind of a neutral between this 12,180 to 13,340. So what do we mean by this is that in order for me to comfortably kind of validate a start of a multi-week bullish impulsive move, saying that this corrective decline from the high of 16th of Feb all the way down to 6th of March. So let me share with you all the accumulated decline that we see so far from its current all-time high in February. Okay, taken towards last Friday low, it's about 12%, right? 12%. So you got to have a clear break above 13,340. That'll be more comfortable to validate kind of a start of a potential new impulsive up leg to target 14,030. Then thereafter followed by 14,435 slash 14,460. So one thing positive over here is that if you were to look at the current push down, that was last week's push down, seems to be like a capitulation move or the washout as indicated by the 4-hour RSI. We have started to kind of a flash bullish divergence signal since 26th of February. And if you could actually look at a Fibo, we call it a fractal approach. So if I were to draw a Fibo retracement, taking from the start of wave 2 to over here, it actually stopped at 61.8%. And if I draw a Fibo expansion from this ongoing decline from its all-time high, it actually stopped at the one time. So we have a kind of a confluence of elements coming in at last Friday low, which is at this 12,180 level. So with that, I'll be keeping a kind of a pretty close watch on the Nasdaq 100. So definitely all things actually moves in line. So I would say that we could not have one major stock indices that is keep on coming down, whereas the rest of the world, even though like the Dow Jones or DAX or some of the Asia index like the Nikkei 225 or the Japan 225 or Hong Kong, they are kind of a have some weightage towards cyclical and value stocks to keep making new all-time high. So as long as this Nasdaq 100 starts to cool down in terms of its close to about a month or so or 4 weeks of decline that was seen in 16th of February, at least it could go a bit of sideways between 13,340 and holding above 12,180. The rest of the outperforming cyclical and value oriented heavy weighted stock indices should continue to actually stage what you call it higher highs or continue to outperform. But nevertheless, if this stock US Nasdaq 100 starts to break new lows, means breaking below 12180, then this preferred scenario will be invalidated. Okay, now moving on to the one of the Asia major will be the Hong Kong 50 index. So the Hong Kong 50 index, this today actually start to see a kind of a sell off again at the start of this week. But where does it stop? It actually stop right at again at this ascending channel that was actually drawn from the low of 30th of October, providing support last week as well, and now providing another form of support again. But so no change. The key medium-term pivotal support will be at 28,000 level, and the upside trigger level still remains the same, which is at 30,160, which is right now the descending trend line, intermediate descending trend line taken from the high of 18th of February. So we need to have a clear break or at this 30,160 to actually give us more confidence to see the return of a potential impulsive up move to target the next resistance at 31,600. So nevertheless, if we start to see a daily close below 28,100 level, we could see a steeper decline to actually target the next resistance, next support at 26,700 and 25,900, which is the congestion that was formed earlier from 11th of November to 23rd of December last year. And if I draw the Fibonacci retracement, it also correspond to the 61.8% retracement of this entire up move from 25th of Sep last year to 18th of Feb, 25th of Sep last year to 18th of February this year. All right, which is the 61.8%. Okay, now moving on to the Nikkei 225 or the Japan 225, we call it in our platform. Okay, so let me start off with the daily chart first. So on the daily chart, uh, yes, last Friday it actually formed a kind of a bullish hammer formation as well. Okay, very similar to what we see on the SOX index, the ETF, the Philadelphia Semiconductor ETF, tested the 50-day moving average before having a daily close above it, and right now actually attempting to retest at this 50-day moving average again, which is coming close to at this support at 28,700 level. So what we have for this week is last week we have a kind of a key medium term support at 28,900. So it kind of did a bit of whipsaw at that level. So this 28,300 will be my neutrality level for this week. So to actually see a kind of a impulsive up start this impulsive up move, I will be more confident to actually validate the up move if we start to see a clear break above 29,500. Okay, so what is 29,500? Which is actually last week high. Pardon me, not last week high. It's actually Friday's, yeah, it is actually, yeah, Friday's high, Friday US session high, and right now also confluence with this intermediate descending trendline resistance that is drawn from the high of 16th of February. So all in all, right, taking from the high of 16th February all the way down to Friday's low, yeah, really staged a decline about 7.9%. Okay, 7.9%. Still holding on to support in terms of the major uptrend earlier on that I shared with you all on the daily chart. Okay, no signs that this particular major uptrend seems to be ending from the 16th of March 2020 low. So for the kind of a multi-week or medium-term strategy, it got to actually have a clear break above 29,500 before I am more confident to validate the start of another round of impulsive up move to actually target the next resistance at 31,350. Okay, so nevertheless, if we start to see a break below 28,300, which is actually last Friday's last Friday's low, and as well as the pullback support of this former descending resistance that was drawn for 15 Jan high to 25th of Jan high over here, like this green line, we could actually see a further slide towards 27,500 as well as a test close to this 2700 figure level, 27,100 figure level, which is this major ascending channel support that was drawn from March 2020 low. So keeping on changing to a neutral stance for the Nikkei 225. So now moving on to Europe, which is the German 30 index, the All right, so the Germany 30 index has been one of the strong outperformer among the major indices, kind of more trading sideways. If you were to look at the price action candlestick for the last, in fact, for the last 4 weeks or so, okay, but holding above this 13,700 level. So if I were to go to the strategy chart, okay, so what I'm seeing over here is same thing, still no change, using 13,700 as my key medium-term pivotal support. Still looking for a slow churn and a push up towards the next resistance level at 14,315 before looking for a break above 14,315 to see it targeting towards the next resistance level, which is the one-time Fibo projection taken from the low of 1st Feb 2021 to a high of 8th Feb, projected to the low of 26th Feb 2021 to actually see a potential up move towards this one-time Fibo expansion level 14,570 slash 730 mark. So nevertheless, if we start to break below 13,700, a daily close below it could see this the start of this whole round of choppy corrective decline to actually retest this support level at 13,300 slash 13,050 level. So with that in mind, so it's kind of a pretty mixed picture right now in terms of a kind of a multi-week strategy that I have, or I would say that the medium-term strategy. So we are actually turning kind of a neutral between the the SPX 500, the Nasdaq 100, the Nikkei, the Japan 225, while still maintaining our bullish stance on the German 30 index and the Hong Kong 50 with the an upside trigger level on the Hong Kong 50. So with that, have a great trading week ahead, and I see you all next in my next video.